Yes, people, a very, very happy evening to all of you. Wow, what energy. Thank you so much. So, guys, we are back with the revision series with yet another chapter, which is chapter number 3 of ICI study module, which is applicability of accounting standard. Now, I'll try my level best to complete this video in 1.5 hours, max to max in 2 hours. We'll do a very, very quick recap of all the provisions. We'll do MCQ from the study mat. We'll solve a couple of questions from study mat. So with that, we'll be done with this revision. So tomorrow, whenever you pick up this video and watch it during the examination time, you should be able to recollect everything just like this. So that is the whole point. So guys, in this chapter, we're going to learn what is the applicability of the accounting standards on corporates and non-corporates. Now, first we'll discuss about the applicability of the accounting standard and Ind-AS also. I'm also going to cover the applicability of Ind-AS for corporates. So all the companies who are engaged, in commercial or industrial or business activities, they have to apply the accounting standard issued by ICAI and notified by MCA. All of you know that on corporates, if you want any accounting standards to be applicable, issue of that standard by ICAI is not yet sufficient. You need the approval from MCA. You need to ensure that MCA notifies it. MCA notifies it. Only MCA notified accounting standard is applicable for corporates. Got it? Okay. Now, what is meant by commercial or business activity? Buying and selling of the goods. Commercial or business activity. If I provide service for which I'm charging money, this is also commercial activity. I'm having surplus money. I'm doing a fixed deposit of that. I'm earning interest on that. That is again a commercial activity. I have surplus money. I'm investing in stock market. I'm getting dividend. That is also commercial activity. I'm into manufacturing. I manufacture products and sell. I'm into industrial business. Right? Now, the real problem comes where, sir, I'm a Section 8 company. Section 8 company. What is a Section 8 company? A not-for-profit organization which is having a formation of a company as per Companies Act 2013. If a not-for-profit organization has to see the applicability of accounting standard, whether it is applied on them or not, what will you see? Check Section 8. No. Yes. Imagine I have a Section 8 company, right? What am I doing? I am collecting the funds and providing the funds for the designated purpose. For example, there's a flood affected area. For that purpose, I'm collecting the funds. As it is, I'm handing over the funds. Or I'm collecting the relief materials and handing over the relief materials as it is. I'm not selling it. I'm handing over as it is. Right? So it's a charitable purpose. If you are doing this kind of activities in the entire organization, on your activity, accounting standard is not applied. So on a Section 8 company, for accounting standard to be made applicable in that organization, in that charitable organization, you need to carry out commercial or business activity. If minute, even one small activity of that organization is commercial in nature, for example, old age home, in that people, for example, let's say there's a Section 8 companies which takes care of all the elderly people. Whatever funds they get, they use it for the purpose of their welfare of the old age people. Are they doing any commercial activity? No. No. So for the funds that they're raising or the funds that they're getting for day-to-day living, on that funds, accounting is done. For that will be apply AS, not required. However, imagine those people, old age people, if they do some handicraft related work, they manufacture some product out of their creativity and then they sell it, then this becomes commercial activity. In such case, accounting standard has to be applied. Now the question is, should I apply accounting standard only on the commercial part or on the entire organization? Even if the small part of your organization is commercial, then accounting standard to be applied on the entire organization. Wherever there is a accounting need to be done. Wherever money is coming in, going out, accounting has to be done. So on all the aspects, the accounting standard will be made applicable. Clear or not clear? Fantastic. Now, whatever I've explained here, notes has been given. So I'm not going through the notes one more time because you've done this in-depth discussion in the regular class. So same thing what is there in the notes has been orally explained right now. Now, first I'll discuss about the applicability of Ind-AS. Applicability of Ind-AS. Now, I'm a company on whom Ind-AS is applicable. Where do I go and see the notification given by MCA? The notification for applicability of Ind-AS is given where in Companies Act 2013? Where is it given? Yes. Under Companies Ind-AS Rule 2015, the notification for applicability of accounting standard, Ind-AS is given for corporates. Okay, not okay? Okay. Now, for our convenience, we have called such company as super big companies. Any company on whom Ind-AS is applicable, in our language, what do we call this as? Super big companies. In exam, will they ask you what is super big company? No. In exam, do you have the authority to write super big company? No. Super big company is only for our understanding. When I talk about the applicability of Ind-AS and AS on corporates, for our convenience, I have bifurcated the company under 3 categories. First category is super big company. Second category is big company. Third category is small company. For our convenience, I have categorized it. There is nothing called a super big company. The name big company, what we allocated, technically that is called as non-SMCs. And small company that we have given a name, we call that as SMCs. Got it, not got it? So one, we have SMCs on whom accounting standards are applicable. Then we have non-SMCs on whom accounting standards are applicable. Any other company which is neither SMC nor non-SMC is that company on which Ind-AS is applicable. But to make this understand, this is difficult. So for easy categorization, I gave this name called as super big company, and small company. It becomes easy for us to understand. Okay. So first I'm talking about super big company. Those companies who will apply Ind-AS while preparing their financial statement. So like that, 3 categorization is given, people. 3 criteria has been laid down. If any one of these criteria is triggered, Aptina, you have to apply Ind-AS. First, from listing point of view, listing status point of view, all those companies whose securities means what? Either shares or debentures or bonds are listed where? In the stock exchange. Which stock exchange? Either in India or outside India, or they are in the process of listing. The listing process has begun. Listing process, for example, right now I gave example, Milky Mist is in the process of listing their shares in the stock exchange. So they have already started applying Ind-AS in their financial statement. Got it, not got it? So any company whose securities are already listed or are in the process of listing, where either in India or outside India, they have to compulsory apply Ind-AS. In this, who is excluded? 2 companies are excluded. One, banking company. Second is insurance company. These 2 are excluded from Ind-AS. Still, banking companies and insurance companies are not notified to follow Ind-AS. So banker or banking company will prepare the financial statement as per their regulator. Who is the regulator? RBI, as per RBI guideline. Whereas insurance company will prepare the financial statement as per the regulatory requirement of IRDAI. Now, when I'm checking the applicability of Ind-AS on listed company or those who are in the process of listing, will I check any of the net worth criteria? No, I will not look into net worth criteria. If anybody is listed up in, you will treat them as Ind-AS company. Net worth criteria need not be checked for those companies who are already listed or in the process of listing. Clear or not clear? This is one criteria. This is first criteria. Again, in the second point, I've covered this point one more time, that the banking and the insurance company, whether listed or not listed, are not required to follow Ind-AS. Got it, not got it? Okay. This is not a criteria. This is additional information, because my second point of non-SMC and SMC talks about banking and insurance. To make it aligned with that, here also I put the same word. Now, so this is my first criteria, people. Listing status is my first criteria. Second criteria is net worth criteria. For applicability of Ind-AS, I will only check net worth. Turnover is irrelevant. Turnover is irrelevant. So then why did you write turnover there? Because in the same point, I have to cover non-SMC and SMC. For them, what is relevant? Turnover is relevant. So my question to all of you, when I look into applicability of Ind-AS, whether net worth is relevant or turnover is relevant, net worth is relevant. Turnover is not relevant. However, when I look into applicability of AS for SMC or non-SMC, what is relevant? Turnover is relevant. Net worth is not relevant. Got it? Not got it? Okay. Now, we are talking about those companies which are not covered above. So who's not covered above? Unlisted companies are not covered above. Above what is covered? Listed companies are covered. Listed companies are covered. So there are two types of company. One is listed. Another is unlisted. In listed, we have three categories. One is banking company. Second is insurance company. Third is other companies. Banking company, insurance company are out of Ind-AS. They will not apply Ind-AS. But listed other companies, they will apply Ind-AS. Got it? Not got it? That is covered in first criteria. In second criteria, what am I covering with? I am covering unlisted, 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 unlisted what? Unlisted companies, unlisted companies. Plus NBFCs. I am covering NBFCs. Got it? Not got it? So companies other than the above, which is unlisted company plus NBFCs, you will apply Ind-AS on them based on their net worth criteria. So what is net worth here? Net worth means shareholders funds. In simple language, it is shareholders funds. In CA final, you will be taught how to calculate this net worth. Correct? In our language, net worth is equal to shareholders funds. Here the limit is 250 crores or more. If any company whose turnover is, whose net worth is 250 crores or more, whose net worth is 250 crores or more, 250 crores or more, has to compulsory follow Ind-AS, has to compulsory apply Ind-AS. Got it? Not got it? When will I check this? Net worth of the previous year, 31st March of the previous year. On that date, I'll check what is the net worth of the company. On that date, if the net worth of the company is 250 crores or more, 250 crores or more, in the following year, you have to apply Ind-AS. In the following year, you have to apply Ind-AS. Okay, not okay? Now, is there any borrowing criteria laid down for Ind-AS? The answer is no. There is no borrowing criteria. The borrowing criteria is there for the applicability of AS. Then comes relationship criteria. Relationship criteria. With relationship, what do we mean? Holding relationship and subsidiary relationship. So if there is any company, example, Kalpavriksha Academy Limited. In bracket, I am recording listed. I am a listed company. My company should follow which AS? It should follow Ind-AS. Why? Because it is a listed company. So in India, all the listed company, whichever listed company you take Reliance Limited, Tata Power Limited, any company you take which is listed, 100% they have to follow Ind-AS. Now, Kalpavriksha Academy has invested or has 51% investment in FFLA, which means what? Whatever is FFLA's capital, in that 51% capital has been contributed by KVA. This is FFLA's balance sheet. Share capital is 10 lakh. In that 5,10,000 capital has been contributed by KVA. Now, since the capital contribution is more than 50%, which means the voting power the company will have is more than 50%. So when I as a company has voting power more than 50%, voting power more than 50%, which means I will be called as, Kalpavriksha will be called as holding company or parent company, holding company or parent company. And this FFLA is there. No, this FFL will be called as subsidiary company. This FFL will be called as subsidiary company. When I discuss with all of you consolidation, right? When I discuss with all of you consolidation and AS18 related party transactions, in that I'll discuss in depth what is holding and subsidiary relation ka different clauses. What are the different criteria? In that I've picked up only one criteria as of now, right? So if any company is having more than 50% voting power in the other company, the investing company, the person who's investing, the company who's investing is called as holding company, and the company who's receiving money is called as subsidiary company. Now, all of you know that KVA Limited, being a listed company, has to follow Ind-AS. Now, FFLA is neither a listed company nor in the process of listing. Net worth is only 10 crore. Net worth is only 10 crore. Should FFLA follow? Should FFLA follow Ind-AS? Answer is no. As per the above two criteria, no. But third criteria says that if you are either a holding company or a subsidiary of that company who's following Ind-AS, then you also have to follow Ind-AS. Imagine FFLA and KVA, both are my company. Both are my company. We call this as group company. This is called as group company. So in one group, if a company is opting Ind-AS apdina, all the other group companies has to follow Ind-AS. All the other companies has to follow Ind-AS. Got it? Not got it? Now coming back. Holding company or subsidiary company of the above will also apply Ind-AS if any of their group companies coming into Ind-AS by virtue of above 2 points. So here, who's holding company? KVA. Who is FFLA? Subsidiary company. Subsidiary company FFLA will also apply Ind-AS. Why? Because their group company, which group company? KVA Limited is coming into Ind-AS. Why? Because of the above 2 point. Because KVA is listed, KVA has to follow Ind-AS. Since FFLA is related to KVA, now FFLA also has to follow Ind-AS. Even though FFLA is not listed, even though the net worth is less than 250 crores, still I have to follow Ind-AS because I'm related to that company who's following Ind-AS. Any difficulty here? No difficulty. Example I gave is Reliance Limited, which is a listed company. Now, applicability of AS. Once on a company Ind-AS is applied, you have to follow all the Ind-AS. There are no relaxations or exemptions available to a company who has to follow Ind-AS. Have to apply all Ind-AS mandatorily. There is no exemption or relaxation. Point is clear or not clear? Clear? Okay, next point. Once Ind-AS becomes applicable and is adopted, once Ind-AS is becoming applicable on you, and if it is adopted, the entity shall continue to apply the Ind-AS for all the subsequent financial statements, irrespective of whether it is continuing to meet the applicability criteria or not. Let's say in year 1, net worth is 300 crores. In year 1, net worth is 300 crores. From year 2 onwards, the company has to follow Ind-AS. Company has to follow Ind-AS. Somewhere in year 4, the net worth has become 100 crore. Can they say, since I'm not satisfying criteria, I will go back to accounting standards? Can the company say no? Once Ind-AS is applicable for your company's apdina, there is no way going back. You cannot go back to the old accounting standards. Once Ind-AS is applied for the company, for rest of your life, Ind-AS only will be applied. Ind-AS only will be applied. Whether the criteria meets or not meets in the future doesn't matter. Once Ind-AS applied means till the end of the life of the company, you only have to apply Ind-AS, Ind-AS, Ind-AS. Okay or not okay? Online people, am I loud and clear? Am I loud and clear? Now, net worth for the purpose of applicability of Ind-AS has to be determined based on the standalone financial statement, and not based on consolidated financial statement. Since all of you have not done consolidation, you will not know it, but I'll just tell you what is consolidation. Consolidation of the financial statement is a procedure where when you have more than one group companies, more than one company, you will merge the financial statement. That is, you'll merge the balance sheet of all the companies together. For example, I have one company called as FFLA and I have another company called as KVA. So individually we'll prepare the financial statement. That is called as standalone financial statement. Individually, company wise, I'll get to know what is the profit loss, what is the balance sheet ka position. But as an owner of both the companies, at the group level, I want to know what is the profit and loss, what is the financial position. So both the P&L will be merged, both the balance sheet will be merged. The process of merging the P&L of all the group companies, the process of merging all the balance sheet of group companies is called as consolidation. So when you merge it, you'll get a revised net worth. So will you take that net worth to decide the criteria of net worth 250 crores being crossed or not? Will you take that into consideration? No. So when you see the net worth criteria, you have to check the net worth of the standalone financial statement. So FFLA's net worth has to be calculated using the balance sheet data of independent FFLA. That is independently, FFLA's balance sheet on independent basis has to be considered to derive its net worth. You can't say, no, FFLA's net worth plus KVA's net worth, both put together, I'll check whether it is crossing 250 crores or not, like that you will not do it. You will take the net worth of the individual company and check whether it is crossing 250 crores or not, whether it is touching 250 crores or not. Got it, not got it? Online people, got it, not got it? Clear at this point? Chalo. Again, I'm going back to chapter 1 because this is a point connected to your chapter 1, in which they have discussed the roadmap for implementation of Ind-AS. In chapter 1, they have discussed the roadmap for implementation of Ind-AS. Since we are discussing Ind-AS, this is the right time to discuss also. So, this Ind-AS was implemented in 2 phases. How many phases? 2 phases. In phase 1, what they said is, from the financial year 15-16 onwards, on the voluntary basis, the companies can opt for Ind-AS. Got it? In that, who are excluded? Bank are excluded, NBFCs are excluded, and insurance companies are excluded. So in the year 15-16, if any company wanted to apply Ind-AS, they were given the freedom on the voluntary basis. You can apply. Got it? Not got it? This is in 15-16. When they saw nobody's applying, then what they did? In 16-17, they made it mandatory. In the financial year 16-17, Ind-AS was made applicable. Sir, was it made applicable on all the people? No. Again, they gave the criteria. Now listen to me very carefully. So what is the criteria? The criteria was any company which is listed in India or outside India, or any company which is in process of listing in India or outside India, having net worth of 500 crore or more. So listen to me very carefully. The applicability of Ind-AS when I discuss right now, what I discussed right now. Here, I said listed companies today, in today's scenario, 2026 scenario, if you're a listed company, Apnina, you have to follow Ind-AS. Will you check your net worth? No. No net worth connection. Anna, in 2016, only those listed companies were adopting or were mandated to follow Ind-AS whose net worth was 500 crores or more. Got it, not got it? Plus, any unlisted company whose net worth is 500 crores or more. If I combine both of this A and B point, what does it mean? Any company, whether listed or in process of listing or unlisted, whose net worth is 500 crore or more, you will be covered under phase 1. You'll be covered under phase 1. Got it, not got it? Sir, will ICA ask this question? 99% no chances this question should come. But in one of the CA final examination, this question is being asked. Because people thought, this is history, past. What has it got to do with present and future? So people didn't study and went. But this was asked in CA final. So tell me one thing. This topic is there in your textbook also intermediate. Can you tell that no, since Ind-AS ka topic is discussed in CA final, ICA should not ask the question in the intermediate with regard to the roadmap? Can you say? No. Because ICA is always judge me and I'll prove you wrong. You have to be prepared. In reality, this has got no connection. It's past, over. So in reality, you will not get any of these things in your life. But exam, in exam, anything can come. It can come from anywhere. If I were to make the paper challenging Apnina, as a paper setter, I can do whatever game I want to do. Nobody can stop me. So hence, we have to remember this. High chances that this might be asked in MCQ. They might ask in MCQ. So be very, very careful. Now, apart from this, any company whose parent company, that is holding company, or the subsidiary company, or the associate, or the JV of the above company or the related company, if any company on whom Ind-AS is applicable, imagine Reliance Industries Limited, net worth how much? 750 crore. Can I say this 500 crores or more? Yes. So Reliance Industries has to apply Ind-AS. Imagine Reliance had one holding company or subsidiary company or associate or JV. Net worth was 10 crore. Is that company supposed to follow Ind-AS? Yes, because they're related to Reliance Limited. Got it, not got it? This was the criteria in which financial year? 2016-17. So 15-16 was voluntarily. 16-17 was compulsory. This was phase 1. Okay. Then came phase 2. Which financial year? Immediately next financial year, 17-18 onwards. Now here, they revised the criteria. So in 17-18, what they said is, all companies which are listed or in the process of listing, where either in India or outside India, which is not covered in phase 1, not covered in phase 1, will be covered here, will be covered here. So who's not covered there? Who's not covered there? Listed companies whose turnover is, whose net worth is rupee 1 to 499.9999 crore. Because the moment you touch 500 crore or more, you're covered in phase 1. So those listed companies whose net worth is less than 500 crore, less than 500 crore, got covered in phase 2 A point. Got it? If I combine both phase 1 and phase 2, what is the result? That is phase 1 or a point A, phase 2 or a point A. Both point A of both phases, if I combine, what does it mean? All listed companies will come under Ind-AS. That is today's applicability. That is today's applicability. Today, any listed company, they have to come under Ind-AS. But in 15, 16, 16, 17, 17, 18, it came gradually. Got it, not got it? Okay. Point number B, it says that unlisted company having net worth of 250 crore or more. Unlisted company whose net worth is 250 crore or more will come under phase 2. Today, tell me, for unlisted company, what is the criteria now? What we discussed? Same only. Net worth of unlisted company, which is 250 crore or more, will come under purview of Ind-AS. So whatever is mentioned in phase 2, that is still being continued even now. It is being continued even now. Got it, not got it? Any difficulty? Any difficulty? Likewise, if you come across any company on whom Ind-AS is applicable, for example, Reliance Industries Limited has to follow Ind-AS. Now, this company is got one holding company, that is parent company, or the subsidiary, or the associate, or the JV. All of these net worth is 10 crore. Should these company follow Ind-AS? Yes. Not because of net worth criteria, because they are related to that company who's following Ind-AS. Who's following Ind-AS? Got it, not got it? Any difficulty? Once Ind-AS are applicable, once Ind-AS is made applicable, an entity shall be required to follow Ind-AS for all the subsequent financial statement. That is, there is no looking back once the Ind-AS adopted by the company. Once you've adopted Ind-AS aptina, you can never go back to accounting standard. You can never go back to accounting standard. Got it, not got it? Okay. Now comes NBFC, banking companies and insurance companies. Banking company, insurance company, then also, now also, are not covered under Ind-AS. That time also not covered, today also not covered. Ana, NBFC were covered gradually. NBFC got covered gradually. Now listen to me very carefully. For NBFC also, the implementation or applicability came in 2 phases. Now, phase 1 for NBFC started from 1890. Sir, how do we remember so many dates? I'll give you a shortcut. Tell me, on compulsory basis, Ind-AS was applied on other companies from which financial year onwards? 16, 17. 15, 16 was voluntary. Compulsory, I'm telling. 16, 17 onwards. 16, 17 ku 2 varshi kalchi ena varum. After 2 years of 16, 17, what will come? 18, 19. 16, 17, 17, 18. 18, 19. So the gap between phase 1 for these companies and the gap between phase 1 for NBFCs is 2 years. So now, for these companies, phase 1 was 16, 17 applina. Add 2 more years to this. What will come? 18, 19. Phase 2 was 17, 18. No. 17, 18 plus 2 years is how much? 19, 20. So phase 2 for NBFCs is what? 19, 20. 19, 20. Got it, not got it? Now, what did they say for NBFC? NBFCs, whether you're listed or unlisted, whose net worth is 500 crores or more, you have to follow Ind-AS from 18, 19 onwards. Same point can I say is phase 1 for the companies also. In phase 1 of companies, what did they say? Listed company or those who are in the process of listing and unlisted company. All the 3 of you, if your net worth is 500 crores or more, you have to follow Ind-AS. Same point here also, no boss. NBFC. Got it, not got it? But here, the year is 18, 19. There, the year is 16, 17. Year only difference. Ulla irukra masala same na. Content is same. Got it, not got it? Okay. Again, if there is any NBFC who is following Ind-AS, if they have any holding entity, that is holding company or subsidiary or JV or associate aptina, then those people also will come under Ind-AS. Those also by virtue of the relationship they'll come under Ind-AS. Got it? Not got it? Any difficulty? No difficulty? Okay. Phase 2 implementation was done from financial year 1918. For which NBFCs? Those NBFCs whose equity debt securities are listed either in India or outside India, whose net worth is less than 5 crore, which means as on today, all the NBFCs, which is either listed or in process of listing, compulsory they have to come under Ind-AS. Even if I say, can I come back and put a word here? Companies, can I put here including NBFC? Companies plus NBFC, which is listed or in process of listing, now they have to come under purview of Ind-AS. They have to come under purview of Ind-AS. If I say this, is there anything wrong? No. Got it? Not got it? So today if I have to check the applicability of TINA, which company? All the company plus NBFCs which are listed or in process of listing has to compulsory follow Ind-AS. Got it? Not got it? Now, 1920. Sorry, 1920. I went 1918. I said, oh my God. Now, NBFCs that are unlisted, whose net worth is 250 crores or more, will come under phase 2. Because 500 crores or more were covered in phase 1. So who is covered in phase 2? 250 or 250 crores or more, but less than 500 crores. They will come under phase 2. Likewise, if this NBFC is applying Ind-AS up TINA, and if this NBFC has got any holding subsidiary, JV or associate, whose net worth is, let's suppose, only 10 crore, still they have to apply Ind-AS because their related party companies applying Ind-AS. Got it? Not got it? Any difficulty? No difficulty. Now, NBFCs whose net worth is below 250 crores are not covered under the Ind-AS category. For them, what will continue? Applicability of accounting standard will continue. Got it? Not got it? Now, let's do a very, very, very quick revision. In revision also, quick revision will do. Please tell me, in 1516, what happened? 1516, what happened? On voluntary basis, Ind-AS was made applicable. Okay, not okay? Okay. Then, in 1617, what happened? This was phase 1, sir. In phase 1, what happened? Listed company or in the process of listing, whose net worth was no 500 crores or more, not more than 500 crores. Tappai no, 500 crores or more. They had to apply Ind-AS. Was it only listed company? No, including unlisted company also. So unlisted company or listed company or those in the process of listing, whose net worth was 500 crores or more, had to compulsory follow Ind-AS in the financial year 1617, and we call this as phase 1. Okay, then what happened? 1718 was called as phase 2. Now here what happened? They covered other listed company. Other listed company na yaar, whose net worth is rupee 1 to, let's say, 500 crores. Easier is less than 500 crores. Actually less than 500 only, for convenience I'm saying. If you're not okay, I'll make it less than 500 crores. No problem. Rupee 1 to less than 500 crore. So after phase 1 and phase 2, what is understood? All the listed companies are covered under Ind-AS, or those in the process of listing are covered under Ind-AS. Then what happened? Unlisted company whose net worth 250 crore or more, whose net worth was 250 crores or more, are coming under Ind-AS. Who is not covered? Unlisted company from 1 rupee to less than 250 crores are not coming under Ind-AS. So where will they go to? Accounting standard. They'll go to accounting standards. Got it? Not got it? Adhe mari, one common point. If on any company Ind-AS is applied, if that company has got any holding company, subsidiary company, joint venture or associate, even though that net worth is not meeting the criteria, net worth criteria is not meeting, since the other group company is following Ind-AS, you also have to follow Ind-AS. Got it? Not got it? This is phase 1 and phase 2 of companies other than NBFCs. Companies other than NBFCs. Then what happened for NBFC? NBFC ka applicability. NBFC. Tell me fast. 1819 was phase 1. In this, what happened? Listed NBFC or those in process of listing. Those in process of listing whose net worth was 500 crores or more had to compulsory follow Ind-AS in the financial 18-19 under phase 1. Under phase 1. Got it? Not got it? Then comes second point, unlisted NBFC whose net worth is 500 crore or more also have to apply Ind-AS in the financial year 18-19 under phase 1. Any problem? No problem. Okay. Then what happened, people? 1920 was phase 2. 1920 was phase 2. In phase 2, what happened? They said all the other listed companies, who are other listed company, whose net worth is right from 1 rupee up to less than 500 crore. Net worth rupee 1 to less than 500 crore. They were covered under 9, that is phase 2. That is in 1920 onwards, they had to apply Ind-AS, which means all the listed NBFCs, as on today, all the listed NBFCs compulsory has to follow Ind-AS. Will I look into net worth? No. Whatever is the net worth, even 1 rupee is the net worth for listed NBFC aptina, you have to apply Ind-AS. You have to apply Ind-AS. Then what happened? Other unlisted NBFC whose net worth was more than equal to 250 crores, more than or equal to 250 crores were covered under Ind-AS. Which means if I'm NBFC, unlisted NBFC, net worth is 1 rupee to less than 250 crores, what will I follow? Accounting standard I'll follow. Accounting standard I'll follow. Got it? Not got it? Any problem? Likewise, if there is any holding company or subsidiary company or joint venture company or associate of this company on whom Ind-AS is applicable, the other company that is holding subsidiary, associate and JV, they have to follow Ind-AS even if their net worth is less. Got it? Not got it? Any difficulty? So what about banking company and insurance company? No Ind-AS. No Ind-AS. So this is the complete summary of Ind-AS. Any problem? Any difficulty? In present scenario, what is the criteria? All the listed companies plus NBFC listed companies has to follow Ind-AS compulsory. This is the listing criteria. Correct? Second, net worth criteria. In net worth, who will come? All the other listed companies and other unlisted companies and unlisted NBFCs whose net worth is 250 crores or more. They have to apply Ind-AS. And holding subsidiary, related party, basically joint venture and associate of that company who has to follow Ind-AS aptina, then this related party company also has to follow Ind-AS. This is the complete applicability of Ind-AS. If this is clear, can I go to the next part, which is applicability of AS? So now, as a company, if I want to check where is the notification given by MCA for applicability of AS on the company aptina, where will I go and check? Under Companies Accounting Standard Rule 2021. So Companies Accounting Standard Rule 2021 has bifurcated the companies under two categories. One is called as non-SMC and second is called as SMC. SMC stands for small medium company. Small medium company. Amul babies. On the Amul babies, can you be very hard? Can you ask them to follow all accounting standards? No. Since they are Amul babies, you have to give them some exemptions or relaxations. Got it? Not got it? However, what is non-SMCs? Non-SMCs means big companies. On big people, you are a little bit hard. What is the compulsion? All the accounting standards you have to follow. That is the difference. Got it? Not got it? Now, once we understand the criteria, then we will see which accounting standard is being relaxed or exempted. Got it? Okay. Now, in Companies Accounting Standard Rule 2021, in the notification, what they have done is they have listed down the criteria as to who is a SMC. How many criteria has been laid down? 5 criteria are laid down. They have told 5 criteria. They have told 5 criteria. All the 5 criteria, if it is satisfied, all the 5 criteria, if it is satisfied, apnina, you are a SMC. You are a SMC. Out of this 5, if any one criteria also is not satisfied, then it becomes non-SMC. Non-SMC means what? Big company. So the first criteria is that listing criteria. First criteria is listing criteria. Let me erase all of these. First is listing criteria. Listing criteria. All those companies whose securities, either equity or debt or bond, whatever you say, are not listed. Kalpavriksha Academy Limited. Who am I? Public company, public company, public company. Am I listed? No. I'm a public company. My shares are not listed. My shares are not listed. So I will come under SMC category provided all the other 4 conditions are also satisfied. So not listed or not in process of listing, where either in India or outside India. So in short, all the unlisted public company, private company, OPC, or for all of these people, you will be categorizing them as SMC, provided the remaining 4 conditions also satisfied. So first condition, for a company to be called as SMC, they should not be listed, nor they should be in the process of listing, either in India or outside India. Next, the word that I've used is and, not or. Whatever used, it is end condition. And means what? Plus. Second condition to be satisfied is that this company should not be bank, should not be financial institution, should not be insurance company. Sir, if I am a bank or if I am a financial institution or if the company is insurance company, then who am I? Big company. They cannot be super big company, because on bank and insurance business, what is not applicable? Ind-AS is not applicable. So they are removed from super big company. They're removed from small company. So where will they go to? Big company, which is non-SMC. Big company, now we can use, but don't use too much also, because in exam, what it is supposed to write and come? Non-SMC. Okay, not okay? Okay. Imagine if this company is listed. Imagine the company is listed. Then what happens? Can the listing company go to big company? No. All the listing companies will directly go to super big company. So they have to apply Ind-AS. So let me talk about Reliance Industries Limited. What is it? Listed. So what should they follow? Ind-AS. Axis Bank Limited. Again, it is listed. So where will they go to? Big company. So they have to follow accounting standard, because banking companies are out of the purview. Nanda, they're out of the purview of Ind-AS and small SMCs. So where will they go to? Big company, which is non-SMCs. Got it? Not got it? Okay. Third criteria, and plus. Now this is called as turnover criteria. All those companies whose turnover does not exceed 250 crore, should not exceed 250 crore. Then they will be called as SMC. So what should be my turnover? Right from 1 rupee to 250 crore. 1 rupee to 250 crore. It is more than 250 crore apnina. It is non-SMC. Up to 250 crore means SMC. So if your turnover does not exceed, this is the keyword. Iduna you write in exam and come. When you write the provision, the provision should be what? The companies whose turnover does not exceed 250 crore. This is the language you write and come. Don't write rupee 1 to 250 crore. This is only given for your understanding and explanation. Don't write this in exam and got it, not got it? Okay. Sir, I'm a company which is not listed. Plus, I'm neither bank nor FI nor insurance company. But my net worth is, but my turnover is 260 lakhs. Who am I? Non-SM. Wonderful. Donkey fellow. I said 260 lakh. I said 260. What did I say? Lakh or crore? I said 260 lakhs. ENT का appointment लूं मैं? I said 260 lakhs. 260 lakh is how much? 2.6 crore. But turnover is within the limit. Who am I? SMC. If my turnover is 250.1 crore, then it becomes non-SMC. Okay, not okay? Okay. Next is borrowing criteria. Companies whose debt does not exceed 50 crore. Means what? If my debt borrowing is somewhere between 1 crore up to 50 crore, where at any time during the immediate preceding accounting year, it's not on the last day of the financial year. It is the any time at the preceding, one second. It is at any time during the immediately preceding accounting year. Now, current year, previous year. On 1/4, the borrowing was 40 crore. 1/10, the borrowing was 50.1 crore. 31st March, borrowing is 10 crore. So will I look the borrowing at the end of the financial year? No. The language what they've used is at any time during the previous financial year. previous financial year, out of 365 days, in any one day also, if your borrowing is crossed, exceeded 50 crore aptina, in the current year, you'll be called as a big company, which is non-SMC. Non-SMC. Got it? Not got it. However, turnover should be seen at the last day of the previous accounting year. Turnover should be seen at the last day of the previous accounting year. I can't take turnover of any one particular day because turnover will change every day. Turnover will change every day. So final turnover, when will I know? At the end of the accounting year. So for turnover, you will see previous accounting year ka last date. Whereas borrowing, what will you see? At any time during the financial year. Got it? Not got it? Got it? Not got it? If my borrowing is exceeding 50 crore up now, who am I? Non-SMC. Non-SMC. I'm a big company. Okay. This borrowing could be short-term borrowing, long-term borrowing, public deposit, whatever you say. All the borrowing considering together, you will take it as 50 crore ka limit. Then end means plus condition. All the company which is not the holding and subsidiary of a non-SMC. Non-SMC means what? Big company. Listed company means what? Super big company. If I have to be SMC apdina, if I have to be an SMC, means small company apdina, I should not be related to big company. I should not be related to super big company. If I am related to big company apdina, then the rules of big company will be applied on me. If I am related to super big company means whatever is the rule of super big company has to be applied to me. Big company ka rule is all AS. Super big company ka rule is all Ind-AS. Purida, now listen to me very carefully. CA.Prathik Academy. First condition. I'm not listed. Nor in the process of listing. Second, I'm neither bank, nor FI, nor insurance company. Third, my turnover 10 lakhs. Fourth, borrowing 2 lakhs. All the four conditions satisfied. So far, I'm a SMC. Anna, I have one subsidiary called as FFLA. Which is a listed company. Listed means what? Super big company. So FFLA will follow Ind-AS. Now, CA.Prathik will follow what? Ind-AS, because it is related to its subsidiary. So it has to follow Ind-AS. If FFLA was big company apdina, they'll follow all AS. Then what should KVA follow? All AS. So if I don't have to be a non-SMC, if I have to not be a non-SMC, if I have to be SMC apdina, then I should not be a holding or a subsidiary of big company and super big company. I should not be related to super big company and big company. If I'm related to non-SMC apdina, then I'll become a non-SMC. If I am related to non-SMC apdina, big company, I'll become big company. If I'm related to super big company apdina, I will also become automatically super big company. Got it? Not got it? So if all these 5 conditions are satisfied, I'll be called as SMC. I'm just explaining this point here. If the company falls under the above 4 criteria, the company, CA.Prathik is following all the 4 criteria, then it is called as SMC with some exemption. I'll get some exemption. I'm a small company, I'll get exemption. However, if such company is either a holding or a subsidiary of a non-SMC, non-SMC means big company. If I'm related to big company apdina, then this company, which so far was SMC, but just because I'm related to a big company, I'll be called as big company and all AS will be made applicable with no exemptions. Same point is explained for super big company. Okay, not okay? Okay. Now, example for this is CA.Prathik Academy Private Limited or CA.Prathik Academy Limited, which is unlisted. Now, what are the certain exemptions available or relaxation available with regard to being SMC? Now here, I have an update with all of you. Listen to me very carefully. If you go back to your chapter number 3, people, if you take page number 3.15, in 3.15, para 2.3.2, they are talking about exemptions or relaxation for small, medium-sized company, SMCs. This is defined where SMC is defined. What is applicable or not applicable is defined where it is defined in notification dated June 23, 2021, which is issued by MCA. So MCA on 23rd June 2021, they came out with a notification explaining who are SMCs and what exemptions are granted to them. In that, the first point says that accounting standard 17 is there, which talks about segment reporting. On the entirety basis, this is not applicable. So accounting standard 17 is not applicable to SMCs in the entirety. Entirety means what? Full AS you will not apply. Full AS will not apply. That AS you need not even touch. Okay, not okay. After mentioning point number 1, they've directly gone to point number 2, which talks about relaxations. Relaxations. In relaxation, what I observed was they mentioned AS20. Now, AS20 earlier in the regular video when I took, I classified this by mistakenly under full exemption, full exemption. But for AS20, there is not full exemption. We have only disclosure based exemption. Disclosure of diluted earning per share is exempted for SMCs. Upon what exemption this is? Disclosure based exemption. Therefore, this AS20 from here, I've reclassified under disclosure based exemption. Got it, not got it. So this one mistake that is done in the regular video that I've corrected here. First point. Then comes accounting standard 3. This I wanted to tell during the regular class itself, but somehow I was skeptical, should I tell or not? Because if I tell, this will get little bit complicated. How much complicated? Little bit complicated. So are you ready for that? Are you ready for that? We should know, as a CA, we should know it. So I felt like telling it, I'll tell it, because some people might tell you for SMCs, AS3 is 100% not applicable. Some people will say you for SMCs, AS3 is applicable. So what is the reality? I'll tell you in both the perspectives. Now listen to me very carefully. Once again, we'll go one by one. Now, if you look into your, listen, people, listen. If you look into your study material under point 2.3.2, on the entirety basis, what ACE is not applicable? 17 alone. Is AS3 mentioned here? No. So technically, can I say AS3 is applicable? Technically, can I say, if I go literally as per the language of ICA study mat, can I say AS3 is applicable? Yes, because in point number 2, where they spoke about relaxations, in this AS3 is not covered. What is covered here? 15 is covered. 19 is covered. 20 is covered. 28 is covered. 29 is covered. 25. Like that, other things are covered. Nowhere AS3 is covered. So if you read this document, prima facie, what will strike your mind is that for SMCs, AS3 is applicable. For SMCs, AS3 is applicable. Okay, wow. Now, I'm taking you to one document. I said, no, there's a notification that is released by MCA for applicability of or relaxation given to AS. That is meaning of SMC, relaxations, etc. This is that notification. In this notification, they have explained what is a SMC. What is the meaning of SMC? Who is SMC? They should not be listed, not in process of listing, should not be bank, FI, insurance company, turnover should not exceed 250 crores, borrowing should not exceed 50 crores. Same 5 points were discussed. No, same point is mentioned here. If you come below, they've explained accounting standard. Now let's go to accounting standard 3. You come to accounting standard 3 cash flow statement. Look at this point above the objective. As per the definition of financial statement under Companies Act 2013, financial statement include cash flow statement. Correct? As a part of financial statement, what should be there? Cash flow statement should be there. However, in case of one-person company, OPC, or a small company, or a dormant company, financial statement may not include cash flow statement. Apana, you need not prepare cash flow statement. Now the confusion was, who is a small company? Small company ka definition is given where? In Companies Act 2013. So I'm taking you to Companies Act 2013 ka definition. What does it say? Small company ka definition, where did you study? Foundation or intern? Both you studied. Okay. So all of you know by heart? Okay. What is a small company? Whose paid up share capital should not exceed 50 lakh rupees. Got it? Okay. Then earlier it was no 10 crore. Okay. Now it is what 10 crore or 50 lakhs? 10 crore. Okay. If any companies, I think we'll go here itself. The point is mentioned here. If any company whose paid up share capital is up to 10 crore, and turnover up to 100 crore, you are a small company. Kalpavriksh Academy. My paid up capital, Kalpavriksh Academy, who am I? Private limited, not limited. I'm a private limited. If my paid up share capital is up to 10 lakh or my turnover is up to 100 crore, I am a small company. Correct? Being a small company, should I prepare cash flow statement in the financial statement? Not required, because AS3 says that generally cash flow statement has to be prepared as a part of financial statement. However, if you're a one-person company or a small company, cash flow statement need not be prepared. Got it? Not got it? Now listen to me very carefully. I'm giving you some data. KVA Private Limited. Correct? My turnover 10 lakhs. Paid up capital 15 lakhs. Net worth, let's say 20 lakhs. Tell me first, what is the status of the company? Whether it's a small company as per the Companies Act or not. It's a small company. Why do you say it's a small company? Turnover is within 100 crore. 10 lakh within 100 crore. And paid up capital is within 10 crore, which is 15 lakh. In the rendu criteria, I'm a small company. Okay, wow. Okay, second, am I SMC or not? Yes, because Kalpavriksh Academy is not listed. Neither bank, nor FI, nor insurance company. Turnover less than 50 crore. I'm not exceeding 50 crores. Borrowing is not exceeding 50 crores. Let's say borrowing here, I'll put borrowing 5 lakh. I'm not exceeding 50 crores. Neither I'm holding in subsidiary of a big company or a super big company. So all 5 conditions satisfied. So I'm a SMC. Now, should I prepare cash flow statement or not? As per SMC criteria, AS3 have to be prepared. It is not excluded, because we come back to SMC ka condition. In the study mat, I say study mat, only AS17 is excluded. Upon AS3, you have to prepare. As per SMC criteria, you have to follow AS3. Yes or no? So as per SMC, AS3 has to be prepared. But since I'm a small company, should I prepare AS3 or not? Here AS3 is not required. So one says prepare, one says don't prepare. What will we do? On that basis, they said that AS3 need not be prepared. So if you see in several books, they have mentioned that AS3 and AS17 need not be followed if you're a SMC. In the point which decide பண்ணிருக்காங்க. புரியுதா? I wanted to explain this that day itself, but I thought it will be complicated. But I feel, see, whether examination point of view this is asked or not, anybody can ask you this question during articleship or after being qualified. At least that time you should know how to handle the situation. Because today when we are preparing, we are not preparing only for the exam. We are also preparing for the life. So tomorrow if anybody asks on the applicability of cash flow statement, with what confidence I'm teaching you, with the same confidence you should answer. Got it, not got it? Clear or not clear? Hence, this is the whole concept. So now, when I see from the examination point of view, what answer will you write and come? You will say, for this kind of situation, AS3 will not be followed. Imagine now, I'm talking about Kalpavriksh Academy Limited now. Limited means what? It's a public company. Public company can never be a small company. Public company is never a small company. Up, who are you? Big company, or you say medium company? Purida. Up, should you prepare cash flow statement as per your financial statement? The answer is yes. Yes or no? Yes. Now, imagine Kalpavriksh Academy Limited is satisfying all the conditions of SMC. It is an SMC Abdina. Should I prepare CFS? Yes, because it is not excluded. In SMC, it is not excluded. So in both the places, they say prepare CFS. So by that virtue, will prepare CFS. Got it, not got it? Clear or not clear? In this, if you have any doubts, please ask. Yes. This is private limited. So being a private limited, and since I'm satisfying all the condition of small company, I'll be called as a small company. Small company, while preparing the financial statement, need not prepare cash flow statement. Got it? Not got it? Not got it. So AS3 is not being attached to the financial statement. But if Kalpurix Academy is limited company, which is public company, abdina, you are not a small company. Who are you? Big company. So since you are not a small company, you have to prepare CFS. Who's saying this? Accounting Standard 3 is telling. In that document, they're telling, if you're a small company, don't give cash flow statement. If I'm not a small company, I have to give cash flow statement. So who is telling? AS3 is telling. SMC is anyways telling. If you're an SMC aptina, you have to prepare cash flow statement. So in both the scenarios, if I add together, I have to prepare cash flow statement for a public company. I have to prepare the cash flow statement for a public company. But for private company, depending on whether it is a small company or not, you have to make a call. Got it? Not got it? So if I'm a small company aptina, private limited small company. If I'm a small company aptina, AS3 is not required. If I'm not a small company aptina, AS3 is required. Got it? Not got it? But now we are seeing accounting standard applicability, which is notification given by MCA. இதுல வந்து AS3 வந்து எக்ஸ்க்ளூட் பண்ணிருக்காங்களா? கிடையாது. So you have to prepare cash flow statement. As per the notification given by MCA, you have to prepare cash flow statement. Got it? Not got it? Hence, in my notes also, what I did is I removed that point. Earlier, I said no, full exemption AS3 is there. That I removed because I am considering here MCA ka notification. But in real life, when you apply AS3, for a small company, you need not follow AS3. Got it? Not got it? Don't prepare cash flow statement for a small company. Clear or not clear? Okay. So for convenience and from examination point of view, considering study mat, what I did is I excluded AS3 from full exemption. As on today for corporates, fully exempted is what? Only AS17 is fully exempted. AS3 is not fully exempted. Got it? Not got it? Now what is the doubt, ma? That is small company. If you see the yes, both yes. For a small company, there is no borrowing criteria. So when you see somebody as a small company, you have to check only into two criteria, rather three criteria. One, they should be having turnover up to 100 crores, paid up capital up to 10 crores, and they should not be the public company. They should be only private company. If all these three conditions satisfied apnina, they are small company, right? So if they're small company apnina, AS3 is not required. AS3 is not required. If they are non-small company, other than small company, means AS3 has to be prepared. AS3 has to be prepared. Okay, not okay? So in this point, there is one sub point which is coming from your accounting standard 3. Okay, not okay? This I didn't want to go into, but I thought I'll put a seed in your mind and leave it. Okay, not okay? So in examination point of view, if they ask you, AS3 is fully exempted or not, what will you say? As per your MCA notification, AS3 is not excluded. AS3 has to be covered. AS3 has to be covered. Fully you have to cover it. Got it? Not got it? Okay. Now comes partial exemption. What is meant by partial exemption? See, there are 4 aspects covered in your accounting standard, which is recognition aspect, measurement aspect, presentation, and disclosure. When exemption is there, either in recognition or measurement or presentation apnina, they are called as partial exemption. They are called as partial exemption. Got it? When exemption is there on disclosure apnina, they are called as disclosure based exemption. Disclosure based exemption. So in AS15, if you see, there are some paragraph of recognition aspect or presentation aspect or measurement aspect which is not to be complied with. Hence, we have put separately under partial exemption category. Got it? Not got it? So sometime all of this put together may also be called as partial exemption. Means what? When an AS is partially followed, we call it as partial exemption. In that partial, specifically why I put AS15, because in that, apart from disclosure based exemption, we also have recognition exemption, measurement exemption, and presentation exemption. So AS15 has got few of other exemptions also. If you come back here and see AS15, there are some recognition and measurement aspect which they don't have to satisfy. That's why I put this separate category. I put a separate category. Whereas if you talk about AS19, they're telling that disclosure is not applicable. This para talks about disclosure. Yeah, in the disclosure is not required to be given. So for that, I've created a separate category called as disclosure based exemption. In that, what comes? 19, 20, 28 and 29. So earlier, what did we cover? 19, 28, 29. What have I added here? 20 has to be added. Got it, not got it. So whatever tricks we adopted for by hearting 3, 17, 20, that is applicable only for non-corporates. For non-corporates, as it is what we learned, no change in that. For non-corporates, whatever we learned last class in regular class, as it is applicable, no change. Got it, not got it. So whatever we learned, it's not gone for a waste. That is applicable only for non-corporates. For corporates, full exemption is only AS 17. Partial exemption, AS 15. Disclosure-based exemption, 19, 28, 29. What I've added here? 20. Event-based exemption, what is there? Same, 21, 23, 25, 27. Got it, not got it. Clear or not clear? In this 5 condition, if any one condition is violated, who am I? Non-SMC. Non-SMC means big company. For big company, all the AS has to be followed. They have to comply with all the accounting standard. No exemptions available. Got it, not got it. In total, how many accounting standards were issued? 32. 32. In that 30, 31, 32 were discontinued and they were merged with Ind-AS. They got it removed here and they got it included in Ind-AS. So how much we have left with? 29. In that, 6 got merged with 10. AS6 got merged with AS10. And then AS8 got merged with AS26. So from 28, if I minus 2, sorry, from 29, if I minus 2, how much it is? 27. So as on today, how much is notified AS? We have 27 notified accounting standards. 27 notified accounting standards. Got it, not got it. So big company have to comply with all 27 accounting standards. For the purpose of applicability of AS under turnover criteria, what is the meaning of turnover? Turnover is always excluding other income, which means you will only consider revenue from operation. Other income is not considered. And net sales, you will take it. Obviously, when you calculate RFO ka format, what did I teach you? It is gross sales minus sales return. So RFO is always net of sales return. But still, they have put a point here on purpose. So we have to remember this. So whenever you consider turnover, it should be minusing the sales return, net of sales return. Got it, not got it? Yes. Borrowing includes long-term, short-term, everything, including public deposit. So all this is a point with regard to applicability of AS for corporates. Now, next we'll see the applicability of AS for non-companies, which is non-corporates. Now here there is a huge amendment which came last year, and this is effective from 1st April 2024. Effective from 1st April 2024. Prior to this, the applicability of AS on the non-corporates were bifurcated into 4 levels. 4 levels called as level 1, level 2, level 3, level 4. Then in financial year, I'll just take the date. I'll take the document. Yes. In the financial year 24-25, there's a meeting conducted by ICI that is called as Council Meeting of ICI, which was 433rd meeting, and that was held between 13, 14, 15th August 2024, in which they have revised the criteria for the applicability of AS on the non-corporates. They said earlier criteria level 1, level 2, level 3, level 4, all level had different turnover criteria, different borrowing criteria, too many things to remember. It was very complicated. So they wanted to ease the life. So what they said is, we will reduce so much criteria and bring it down to 2 criteria, like how we have for applicability of AS for corporates, like SMC and non-SMC, SMC and non-SMC. Correct? No. For AS applicability of 2 company, big company and small company. Big company, small company. Big company, all AS applicable. Small company, AS with relaxation and exemption. The big company here is called as large entity, and small SMCs are called as MSME. Like how it is applicable for corporates, they made it applicable for non-corporates also. So from level 1, level 2, level 3, level 4, they came to only 2 level, which is large entities and MSMEs. Level 1 is now referred to as large entity, and level 2, 3, 4 is now referred to as MSME, which is micro, small and medium entities, MSMEs. Only two categorization. Now, this is applicable from what date onwards? This is applicable on those corporates from 1 April 2024 onwards. So whatever the criteria is laid down, no, you will see that criteria previous year to this. What is the previous year to this? 23-24. 23-24. If these 5 criteria are satisfied, Aprina, from 1/4/24 onwards, this applicability will come into picture. And now also, that is from 1/4/24 onwards till now, you have to comply with these new requirements. You have to comply with these new requirements. So here also they have defined what is MSME. Who has defined this? ICAI. No need of notification by MCA. For non-corporates, if ICAI is issuing AS Aprina, that is applicable on the non-corporates. So ICAI is copy-pasted the same condition given by MCA. What condition? Same 5 condition. First condition, this non-corporate entity should not be listed nor should be in the process of listing where in any stock exchange, either in India or outside India. Now you'll be wondering that how can a non-corporate be listed? Non-corporate means what? Partnership, LLP, sole proprietorship concern. How the hell can these people be listed? Now please understand, there are certain organizations who are not company, Anna, their securities, more specifically their debt instruments called as bond, can be listed. So if you take example of NABARD. NABARD is one such organization which is created by the Act of the Parliament, right? They have their bonds, debt instruments listed on the stock exchange, but they are not company. They are not company. Upon they are non-corporates, but still they have their bonds listed on stock exchange. Correct? So this entity plus NHAI, National Highway Authority of India, again a non-corporate, but still they have their bonds listed at the stock market. So any entity listed up Nina, they cannot be MSME. So NABARD and NHI have their bonds listed on the stock exchange. Can they be called as MSME? No, they'll be called as large entity. So for you to call as MSME, you should not have your securities listed on the stock exchange. If you have your stock listed on the stock exchange, Aptina, you are you large entity. So any entity whose securities are listed or in the process of listing in stock exchange, Aptina, they are called as large entity. Who are they? NABARD or NHAI. They will come under large entity. They will come under large entity. Got it? Not got it? Otherwise, in India, we don't have any provision for partnership firms or sole proprietorship concern or LLP to get listed. For you to be listed, you should be a company. But a few exceptions given for these kind of organizations where they can have their stocks listed on the stock exchange. That is why this point has been covered. Okay. First condition, if I have to be MSME Aptina, I should not have my securities listed in the stock exchange or not should be in the process of listing also, where either in India or outside India. First condition. Next is again and condition. And means what? Plus. This entity, for me to be MSME, I should not be bank. I should not be FIs. I should not be insurance company. I should not be insurance entity. If I am bank, if I am having a financial institution, or if I'm into insurance entity, Abdina, then I will be coming under large entity. I'll be coming under large entity. Got it? Not got it? Okay. Next condition is again turnover criteria. When should you check this turnover? On the last date of the preceding accounting year. On 31st March of the previous accounting year, you have to check. What should be the turnover criteria? If I have to be called as MSME Abdina, my turnover should be 1 rupee to 250 crores. It should not exceed 250 crores. If my turnover exceeds 250 crores, Aptina, who am I? Large entity. So turnover more than 250 crores, large entity. Up to 250 crores, MSME. Any problem? Same criteria they have copy pasted. So your life has now become easier. Plus, fourth criteria, again, borrowing criteria. If my borrowing is anywhere between rupee 1 to 50 crores, that is up to 50 crores, who am I? MSME. But if my borrowing is more than 50 crores, who am I? Large entity. Got it? Not got it? Okay. Then comes the last point. For me to be MSME, apart from satisfying the above four conditions, the fifth condition is that I should neither be holding or the subsidiary of the large entity. Because if I'm the holding or the subsidiary of large entity Aptina, if my elder brother or younger brother is large entity following all AS Aptina, then I also have to apply large entity ka concept. So if I have to be MSME Aptina, I should not be related to big entity. I should not be related to large entity. All these 5 conditions together, if you satisfy Aptina, you are a MSME. In this, if any one condition is violated Aptina, you are a large entity. So if you are an MSME, but you are a holding in the subsidiary of the large entity Aptina, then you are no longer MSME. You will automatically become large entity. Got it? Not got it? Got it? Not got it? Oh. Example. Tirupati Ponma. Example I'm coming. Example of large entities. Tirumala Tirupati Devasthanam Trust, TTD. TTD. They are into commercial activity. They are into commercial activity. Lot of commercial activity. The ticket that you pay, 300 rupees ticket, commercial activity. Extra laddu ka paisa that you pay, commercial activity. So even in your not-for-profit organization, trust, small part also is what you call commercial aptina. You have to apply AS. You have to apply AS. Okay. Kandipa. Turnover more than 250 crores. Oh, yes. No doubt. Then comes NABARD, IRFC, ESI, ICI, ICSI, and all the big four audit firms. Big four audit firms, they have branches, multiple branches across India. All of them put together, turnover easy will cross 250 crores. So all of them come under large entity. Any sole proprietorship concern, partnership concern, LLP, trust, society, they'll all come under small companies. Sorry, they'll come under MSMEs. MSMEs, provided those 5 conditions are satisfied. Now, what is the applicability criteria? If you are a large entity, Aptina, all the 27 A's has to be complied with. No exemptions, no exemptions, no exemptions. Okay, not okay. But if you are a MSME, Aptina, AS 3, 17, 20, 24, full exemption. 3, 17, 20, 24, full exemption. So we don't believe, sir. Can you show it somewhere? Okay. Come back here. दिख नहीं रहा, कहां नहीं दिख रहा है? Accounting standard not applicable to all MSc in the entirety. Entirety means what? Full A is not applicable. Which one? 3, 17, 20, 24. Got it? Not got it? Clear or not clear? Okay. Then you have disclosure based exemption. Means you have to follow this AS, but wherever the disclosure part is coming, no, that alone not required to follow. Which AS is all that? 10, 11, 15, 19, 22, 26, 28 and 29. For all this AS, partially will follow. Which aspect? Measurement aspect, recognition aspect, presentation aspect. Disclosure not required. So all the disclosure should I not follow? Is it like that? No. You have to go and see which disclosure para they have exempt. That disclosure requirement alone you will not show. So that you have to go and see in the respective document. So for AS10, what they have told, don't comply with para 87, which is talking about disclosure. Like that, for AS11, what they have told is a para 44 for disclosure, which is not required to be complied with. If you think only these two are the disclosure paragraph, there are other disclosure paragraph also. But in that, they are very clearly told that which disclosure paragraph you have to not comply with. So this you have to remember. 99%, my heart says ICA should not ask this question specifically, that in AS10 for MSME, which para is not required to be complied with, they should not ask. But 1% chances there, because ICA is like always, judge me and I'll prove you wrong. You think that this will not come. And the attempt varum. So my humble request is, don't sit and by heart right now. Finish your syllabus fully. At the end, if you have the willpower to by heart, then you by heart this. Keep this as a last option. Keep this as a last option. Is that okay? Online people smile, no? Ah, nice. Very good. Very good. Break you want? I'll break you. Now, this is a marathon. Continuous class without break. Now, event-based exemption. Event-based exemption. AS 14, 21, 23, 27, 25. If event is coming into picture, then you apply. Otherwise, not required. If amalgamation is happening, apply AS 14. Otherwise, not required. If consolidation is coming or applicable, then apply. Otherwise, not required. Hence, we call this as event-based exemptions. Got it? Not got it? So far, game is clear. Any difficulty? Okay. Now, additional condition has been laid down. Additional condition has been laid down for AS 18 and 28. Now, listen to me very carefully. For AS 18 and AS 28, AS 18 talks about related party disclosures. AS 28 talks about impairment of asset. Exemption is available to MSME. As an MSME, no need to follow AS 18. No need to follow AS 28. Provided the following 3 conditions are satisfied. Provided the following 3 conditions are satisfied. First condition, turnover criteria. Second condition, borrowing criteria. Third condition, relationship criteria. Now, how to remember? I'll put your data in mind. Listen to very carefully. What they've done is, whatever is the original turnover criteria, no? What is the original turnover criteria? 250 crore. Do 1/5 of that. 1/5 of that. How much it is? 50 crore. Got it? Not got it? So now the turnover criteria for AS 18 and 20 is what? 50 crores. For borrowing, what is the limit? 50 crore. What is 1/5 of that? 10 crore. So borrowing criteria is 10 crore. அதாவது you are an MSME. Okay, wow. All 5 conditions satisfied. You are an MSME. So whatever relaxations we gave, that is all applicable. But when it comes to AS 18 and AS 28, 3 conditions has to be checked for. The turnover should be from rupee 1 up to 50 crore. If your turnover is right from rupee 1 up to 50 crore apnina, then AS 18 need not be followed. AS 18 and 28 need not be followed. Sir, I'm an MSME, but my turnover is 51 crore. My turnover is 51 crore. I'm MSME. Turnover is 51 crore. Should I follow 18 and 28? Yes. 18 and 28 I have to follow. If my turnover is more than 50 crore. Same way, borrowing. Borrowing is right from rupee 1 up to 10 crore. If borrowing is right from rupee 1 to 10 crore apnina, 18, 28 need not follow. Because you are a MSME ka smaller version. You're coming at a smaller version means no need to follow 18 and 28. But if your borrowing is more than 10 crore, then 18 and 28 has to be followed. 18 and 28 has to be followed. Got it? Not got it? For 18 and 28 not to follow, 3 conditions, all of them has to satisfy. Turnover should be up to 50 crore. Plus, borrowing should be up to 10 crore. Plus, you should not be holding entity or subsidiary entity of that entity which applies AS 18 and AS 28. If there is some organization who is applying 18 and 28 and by chance you are relative of that organization apnina, then you also have to follow 18 and 28. Got it? Not got it? In regular classes we did questions based on all of this because here we had luxury time. So we did almost some 10 examples, different examples to put the data in mind. So this is revision class. So I believe that by now you are clear with all the data. So I'm just doing a recap of all those points. Clear or not clear? Any difficulty? No. Now, I'll give one example. One example we'll see. Turnover, borrowing. Not listed, not bank or FI or insurance entity. Not subsidiary or holding of large entity. Okay. CA.Prathik Academy. CA.Prathik Academy. Turnover. Why am I creating this? I already have a document now. Very fast we'll do. KVA Cooperative Bank. KVA Cooperative Bank. Is it a company or non-company? Company or non-company? Cooperative. If it is company apnina, private limited should be there. Is the word limited, private limited, OPC given? No. Upon first you have to identify whether the entity is company or non-company. What is it? Non-company. Now coming to non-company apnina, KVA Cooperative is a bank. Bank apnina by default they are large entity. Will I look into any other criteria? No. Ask it events. Is it company or non-company? Non-company because there is no word OPC, no word limited, no word private limited. So this is non-corporate. Now, turnover 12 crore, borrowing 2 crore. Astrid Events is neither listed nor holding a subsidiary of the large entity, nor bank, nor FI, nor insurance entity. Okay, wow. Astrid Event, who am I? For me to become MSME, I should not be listed, nor in the process of listing. Shh. I should not be listed, nor in the process of listing, either in India or outside India. Second, I should not be bank, FI, or insurance. Third, my turnover should not exceed 250 crores. It is well within 250 crores. My borrowing should not exceed 50 crores. It is well within 50 crores. And I'm not the holding and subsidiary of the large entity. All 5 conditions satisfied. Who am I? MSME. MSME. But my question is, AS 18 and 28, applicable, not applicable? For AS 18, 28, to not apply, 3 conditions. My turnover should not exceed 50 crore, not exceeding. My borrowing should not exceed 10 crore, not exceeding. Nor I'm holding a subsidiary of that entity who's following AS 20, 28 and 18. So all the 3 conditions satisfied. Should I comply with 18 and 28? Not required. Same point has been mentioned here. Got it, not got it. Now, ABC firm, corporate or non-corporate? Non-corporate. Turnover 151 crore. Borrowing 40 crore in current year. Please tell me whether you are a corporate or non-corporate. When you see borrowing criteria, will you see borrowing of current year or previous year? Previous year. Is current year borrowing even considered? No. Current year borrowing criteria is not applicable for classification of SMC, non-SMC or MSME or large entity. Borrowing up Tina, I should always see the previous year ka borrowing. Current year borrowing is not relevant for the borrowing criteria. Okay, not okay. Okay. So when I come here, borrowing is 50 crore. When at any time during the previous year, if you see, borrowing is 50 crore. Okay, wow. Is ABC firm listed? No. Is it bank? No. Is it FI? No. Is it insurance? No. 3 conditions satisfied. Turnover not exceeding 250 crores. Borrowing not exceeding 50 crores. All the 5 conditions satisfied. All the 5 conditions satisfied. What happened, Gana? Borrowing not exceeding 50 crores. All the 5 conditions satisfied. Who am I? Who is ABC firm? MSME. MSME. Now what we have to check? Applicability of 18 and 28. So what is the condition? Turnover should not exceed 50 crore. Here it exceeded. Borrowing should not exceed 10 crore. Exceeded. Both the points violated. So should they comply with 1828? The answer is yes. They are MSME, but since turnover is more than 50 crore and borrowing is more than 10 crore, 1828 is not exempted. Not exempted. Okay, not okay. Rest all these questions we have discussed in the regular class. We have done already, so no need to discuss one more time. Super. Now, coming to important points. There are some important points for the purpose of non-companies. Now, in case of non-corporates, large entities MSME, there is some disclosure to be given by MSME for availing all exemptions. They're telling that an MSME which avails exemption or relaxation given to it shall disclose. Means if I'm an MSME, I'm going to avail exemption of Dina. I have to give some disclosure in the notes to accounts. I have to give some write-up in the notes to accounts. What write-up should I give? That I'm an MSME. That I'm an MSME. The fact has to be stated that I'm an MSME. I've qualified to be an MSME. I have to state it. Plus, I have to mention that it has complied with all the accounting standard which is applicable to MSME. Apart from those AS which is exempted, all the other AS which I'm supposed to comply with, I complied that. For that, like that, you have to give a disclosure. Like that, you have to give a disclosure. So where is this point mentioned, sir? I showed you the notification, no, which was given by MCA. The same point is copy pasted by ICAI in applicability for non-corporates. So whatever points has been mentioned here, no, same point they have tried to copy paste for non-corporates. Now, second point, in the regular class, I had this point as the 4th point. I changed the order. Now, disclosure of MSME. What disclosure? for not opting exemption for certain AS. If certain AS which is exempted, but you are telling, no, I don't want exemption, I will follow that AS aptina. With regard to that, you have to give a disclosure. What disclosure? If an MSME opts not to avail exemption is there, but I'm not availing exemption or relaxation in respect of some accounting standard, Let's suppose AS 3, 17, 20 and 24. These 4 ASs are exempted. I'm not following all the 4 AS. In that, I'm just following only 1 AS. Remaining 3, I'm taking exemption apdina. Then what to do? It should disclose the standards in respect of which it has availed exemptions or relaxation. In the AS you have availed exemption relaxation, that you have to mention. So I'm coming back again. Asset events. It is MSME. Tell me one thing. Which all AS is fully exempted? 3, 17, 20, 24. Now, asset event says that I will follow cash flow statement. I will prepare cash flow statement. I don't want relaxation. Appo relaxation edhukku veno? 17, 20, 24 relaxation. Appo this I am preparing. This I am preparing. This I am not preparing. This I am not preparing. So the document says, the point says that the AS for which exemption is availed, no, that you have to disclose. Which AS the exemption you are availing, that you have to disclose. Got it? Not got it? It shall disclose the standards, those standards, which standard, in respect of which it has availed exemption or relaxation. That is point number 2. Got it? Not got it? So point number 1 talks about disclosure. What disclosure? Disclose that you are MSME and disclose that all the other AS which is applicable is followed. Got it? Not got it? Here, if MSME is not opting for some exemption apdina, whichever exemption you're opting for, that disclosure you give. Because all the other AS which you followed, its disclosure is coming where? In this point. All the AS what you've complied with, I've complied properly, like that, give a disclosure. That is getting covered in point number 1. This is A apdina, this is B. So in 1B, AS3 I followed apdina, you will give a declaration. But what should be there in 2A? That AS which I'm not following, which I'm exempted apdina, that I should cover in 2A. Got it? Not got it? Clear or not clear? So AS3 is getting covered in point number 1B. And what AS I'm not covering, that is coming under point 2A. Like that, all the disclosures are coming. Okay, not okay? Okay, not okay? Okay. Now, if any entity was a large entity earlier, now it became MSME. Sometime the entity was a large entity earlier, now it became MSME. I'll take an example itself and show it to you. CA.Prathik Academy furnishes the following information and wants you to classify itself as MSME. It wants itself to be classified as MSME and avail exemption from year 2 onwards. So listen to me very carefully, very, very important. High chance that question will come from this segment. Year 1, large entity. Since you're a large entity, you will comply with all AS with no exemption. All AS with no exemption. When they came to year 2, it became MSME. All the 5 conditions satisfied. What are the 5 conditions? CA.Prathik Academy is not listed. Nor bank, FI or insurance. Turnover not crossing 250 crores. Borrowing not crossing 50 crores. CA.Prathik Academy is neither holding and subsidiary of large entity. So all 5 conditions satisfied. MSME is solving. Ana, they will not be called as MSME. Why? Because you will not get the status of MSME if you were previously a large entity. If you're previously a large entity aptina, then you have to satisfy 5 conditions of MSME for 2 consecutive years. Apana, you have to remain MSME satisfying those 5 conditions for 2 years. But you will have to comply with all AS with no exemption. So in year 2, even though you satisfied all the 5 conditions of MSME, you still have to comply with all AS of that particular applicable, all applicable AS has to be satisfied. Year 3 also, you have to satisfy all the 5 conditions of MSME and comply with all AS with no exemptions. Got it? Not got it? Appoda, in year 4, you'll be getting exemption provided that in year 4 also you're satisfying all 5 conditions of MSME. Got it? Not got it? So what is the logic behind it? The logic behind that is, in year 1, you are a large entity, you disclosed all AS. Based on that disclosure, there was a transparency. We got information. We means who? Banker, investor, everybody. We got so much of data. Based on that information, we invested money in your business. All of a sudden, in year 2, if you become MSME and start not following ASS one by one, if you start getting exemption one by one, then the transparency will come down. When the transparency comes down, my trust on you will start shaking. The investor and banker ka trust on you will start shaking. They will be in discomfort. In order to not put those external people under discomfort, they said that, look, boss, even though in year 2 and year 3 you are MSME satisfying all 5 conditions, but since you are large entity earlier, you have to continue to show the full disclosure, full AS for 2 years consecutively, 2 consecutive years, so that from the 3rd consecutive year onwards only you'll become an MSME with exemptions. Got it, not got it? Clear or not clear? Online people. Video, Evada. Rajdeep, Shrivant, Abhinya, all gulla. Niveda, Bhuvan. Hungry, so eating something? Nom 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 nom. What break? For a large entity which subsequently becomes MSME, and if desiring to avail exemption, it has to remain MSME with no exemption for 2 consecutive years. Therefore, in above case, Kalpataru Academy has to remain MSME with no exemption in year 2 and year 3, so that it can avail exemption in year 4 by still being an MSME. Will still being an MSME. Got it, not got it? Clear or not clear? Now, I have a point to ask you. Or okay, when I do MCQ, that time I'll ask. Leave it. There's one question connected to this, that time I'll ask. No, not now. When the right time comes, I'll ask. So coming back to this point, when a large entity becomes MSME, when an enterprise which was previously a large entity, not an MSME, subsequently qualifies as an MSME, subsequently became an MSME, it shall not be entitled to exemption. Even though in year 2 become MSME, you will not get exemption unless you are MSME without exemption for 2 consecutive accounting year. So when you look at exemption, MSME exemption is available only from the 3rd consecutive year. Got it, not got it? Now, year 1, large entity, all AS. Year 2, MSME, all AS. Year 3, large entity, all AS. Year 4, MSME. Now tell me, all AS. Now listen to very carefully. Year 5, MSME. Think and see. See, 1 MSME here, 1 MSME here. So 2 MSME here gone. You have to check for consecutive year. So here also it is all AS. So 2 consecutive years, 5 conditions satisfied. Now in year 6, if you are MSME, then you can avail exemption. Clear or not clear? Same rule is applied for corporates. Same rule applied for corporates. From non-SMC, if you become SMC, apnina, same rule, no change. Same rule, no change. Next. Earlier you were MSME, now you became large entity. Earlier MSME, now you became large entity. Now what is the problem here? The problem is that, example I'm taking example as cash flow statement. Okay. AS3 is not required to be followed if you are MSME. This is in year 1. In year 1, you have not prepared cash flow statement. But in year 2, you became large entity. Since you became a large entity, can I say you have to follow AS3? So when I prepare AS3, all of you know the format, no? The first column is particulars column. What is the heading? First heading. Cash flow from operating activity. Like that you start. Then you will give current year ka data. Current year ka data, which is year 2 ka data. Now the problem is that generally you're supposed to give a comparative. We always give a comparative. When you prepare the financial statement as per schedule 3, when you prepare any financial statement as per schedule 3, you have to give a comparative. Cash flow statement is a part of your financial statement. Comparative has to be given. Now the problem is, previous year, which is year 1, did you prepare cash flow statement? No, because you were exempted last year. Now the question what people asked is, should I prepare year 1 ka cash flow statement in year 2 for comparative purpose? For comparative purpose, should I prepare year 1 ka cash flow statement in year 2? In year 2, should I prepare it? The answer is no, not required. If it is prepared up to now, then what is the point of exemption? So you're not required to prepare or alter the data because you have changed your status from MSME to large entity. And the point is, if any entity was MSME earlier, enjoyed MSME exemptions, but it now no longer qualifies any exemption up to now, from the current year onwards, it must apply with all relevant accounting standard without exemptions. Past year's corresponding financial statement need not be changed or restated in the current period since exemption was used earlier. No, so retrospectively, you'll not go and change anything. Whatever the change is applicable, it is applicable prospectively. The entity must disclose in the note. Since you're not giving me previous year data, as a user of financial statement, I'm eager to know why have you not given the past year data. So for that, you have to give me a disclosure. Only then when I read it, I'll understand. So what disclosure you have to give? You have to mention that you were MSME previous year. And since you were MSME previous year, you took exemption of AS3 like that, you have to mention. Fact that the previous year figure is not revised also shall be stated. Since I was MSME last year, since I did not follow AS3 last year, current year I have not revised it like that, you have to give a disclosure. So all the 3 points has to be stated. What 3 point? The first point that you have to state that why have you not given the previous year ka comparative? Because last year I was MSME. Last year I did not prepare cash flow statement. And therefore in the current year I have not revised it. Like that 3 points has to be given in the disclosure. Got it, not got it. With this, we're done with the theory discussion of the chapter 3. Okay, not okay? Now, enterprise to which accounting standard applies. Any enterprise which is engaged in commercial, industrial, business activity, whether they are profit oriented or not for profit oriented, that is charitable purpose. Even if a charitable purpose, you are supposed to apply AS. Got it, not got it? Clear or not clear? Even if a very small portion of the activity of the enterprise is considered commercial, even in the small part, you're a charitable organization or a religious purpose organization. Nothing is commercial. Out of 100 activities, 19 activity non-commercial. And one activity, small activity is commercial. Should you apply AS? Yes. So entire charitable and religious organization has to apply AS. This is what is mentioned in this point. In the regular class, we've discussed this paragraph in depth. Now, overall summary I gave you. Implication of mandatory status. Whenever we say accounting standard is mandatory, where the statute governing the enterprise does not require compliance with accounting standard. Where the statute governing the enterprise does not require compliance with accounting standard. Example, partnership firm, the mandatory status of accounting standard implies that in discharging their attest function, the members of the institute is required to examine whether the financial statement is prepared in compliance with AS or not. Now listen to me very carefully. I'm talking about non-corporates, partnership firm or sole proprietorship concern. Is ICAI, who's issuing accounting standard, is got a legal status where it can mandate somebody to follow AS? No, it's not a legislative body. It is not a law framing body. So whatever law they are framing, it is not binding on the people. So Babu Pandipuri Wala, you and I, who are small people, sole proprietorship concern, partnership concern, if they don't follow AS, can ICAI penalize them? You go and ask who is ICAI, they'll be staring at you. They don't know who is ICAI. They don't consider ICAI as a legal statutory body. Got it, not got it? Will they follow AS? No. If they don't follow AS, can ICAI come and screw them? No. Then in that case, then nobody will follow AS. Then what is the point of ICAI giving AS? So ICAI says that, look boss, today Babu Pandipuri Wala, while preparing financial statement, will not follow AS. Tomorrow, if he wants to go for a bank loan, he might need some attestation function from us. He might ask, sir, please sign on this document and give. Only then will bank process loan. Then he'll come to me. Or tomorrow, if he's applying for visa, for applying visa, you have to attest the financial statement and give. That time when he's coming, no, you tell him that you're supposed to follow AS. And whenever you give any audit report, let's say Income Tax Act will tell you to compulsory do tax audit. So tax audit is done by whom? Auditor. So you have to sign it. That is called as attestation function. So whenever as a CA, you are doing attestation function, no, you have to check whether they have followed AS or not. If they have not followed AS, you can't hit them, beat them, or penalize them. Because as auditor, your job is to advise them to follow AS. If they follow AS, in your opinion, say that this financial statement is prepared as per required AS. அப்படிங்கிறது opinion கொடுங்க. If he has not followed AS அப்படின்னா, in your audit report, in your attestation function, mention that this financial statement is not complying with accounting standard. So you will just give your opinion. That is what is mandatory status here. Mandatory status doesn't mean that they have to compulsory follow. If they don't follow, they'll be penalized. It is not like that. So when you discharge your attestation function, you have to ensure that these people have complied with, and accordingly give the report. If they complied with, give a positive report telling that yes, they have complied with, or is tell that they have not complied with. So how to frame the language in the report, you will study in the subject called as audit. In the audit subject, you will be taught how the report needs to be prepared, how the language has to be used. In the event of any deviation from accounting standard, they have the duty to make the adequate disclosure in the report. They means who? CA. You and I has got the duty to make the adequate disclosure in the report so that the user of financial statement may be aware of such deviation. It should nevertheless be noted that the responsibility for the preparation of the financial statement and for making adequate disclosure in the management of the enterprise. Adavadhu, it is the responsibility of the client to ensure that the AS is followed properly, the financial statement is prepared as per the AS, and in the management report, the information should be sufficiently given is that of the responsibility of the client. It's not your responsibility to force him to follow AS. The auditor's responsibility is to form an opinion and report whether such financial statement is complying with AS or not. You can't force somebody to follow AS. As an employee CA, if I'm employee CA of any organization, then I'll tell my managing director, no, we have to prepare the financial statement as per AS. So we're not talking about that employee CA. We are talking about auditor CA who's doing attestation function. உன்னோட ரிப்போர்ட்ல வந்து அவன் கரெக்டா financial statement prepare பண்ணும்போது have they followed AS or not, you have to form an opinion and give. You can't take a stick and beat somebody and make them follow AS. That is what they're trying to give a clarity here. Got it, not got it? Clear or not clear? With this, all the points are done. Now let's very quickly go through MCQs. First MCQ. From which accounting period is the revised scheme for the applicability of accounting standard for non-company entities effective? From 1st April 2024 onwards, the new revised scheme for the applicability of AS on the non-corporates has been implemented from 1st April 24 onwards. I said no. When I took this concept, date is relevant. They can ask the date anywhere in MCQ. First question itself is date-based question. Like this, can they not frame? Not paragraph. MCQ question for roadmap for Ind-AS. Phase 1, phase 2, date, turnover. Can they frame or not? Possible. So if you are aiming to score 90 and above, apdina kandipa nook and corner of the book has to be studied. Got it, not got it? Okay. Which of the following is not a condition for classification of a non-company entity as MSME under the revised ICI criteria? Now, please tell me. There are some condition for non-company. This condition is given by whom? MCA or ICI? ICAI. So, which of the following 4 points are given? No. கீழ கொடுத்திருக்க 4 பாயிண்ட்ல எது வந்து கண்டிஷன் கிடையாது? Which means out of the 4, 3 will be condition, 1 will be not a condition. So which is not a condition is what they're trying to find out. Turnover should not exceed 250 crore. Is it a condition or no condition? It is a condition. Entity should not be a bank or insurance company. Is it a condition or not a condition? It is a condition. Entity should not be subsidiary of non-SMC. Is it a condition or non-condition? This also is a condition. If you are a subsidiary of a non-MSME aptina, large entity aptina, you also become a large entity. All the 3 are condition. Look at the C1. Entity should not be having borrowing exceeding 50 crore. Sorry, what did I say? Sorry. Entity should not have borrowing exceeding 100 crore. 100 crore borrowing, is that even a condition? What is borrowing condition? More than 50 crore is a condition. There is no condition of 100 crore. So which is the odd one out here? Option C is the odd one out. Now go back to the question. It's a very tricky question. Since I'm explaining, you're able to understand. When you read this for the very first time, people will go blank. What are they asking? Because the language of the sentence is negatively formed sentence. It's not a positive sentence. It's a negative sentence. Which of the following is not a condition for classifying a non-company entity and as MSME under the revised criteria? So like this, they can put googly ball. You knew all the condition, but still the language is framed in such a way that you got stuck. Any difficulty? Okay. Next. Which of the following accounting standard is not applicable in its entirety to all MSME? MSME. So which four AS is not applicable to MSME? 3, 17, 20, 24. Should they follow AS1? Yes. Should they follow AS9? Yes. Should they follow AS22? Yes. What are they fully exempted? AS3 is fully exempted. Got it, not got it? Easy or difficult? Easy. Okay. Very easy. Super. Now, if a non-company entity newly qualifies MSME, look at this. A non-company entity newly qualified as MSME. Newly qualified MSME appadina, what were they previously? Large entity. For year 1, large entity. Year 2, newly qualified as MSME. When can it start availing exemption available to MSME? After remaining MSME for 2 consecutive years. Only when it remains an MSME for 2 consecutive years, from 3rd year onwards, they can avail exemption. So this is the right answer. Is this the right answer? A is the right answer. Immediately from the 1st year of qualification, that is year 2 onwards, can they become apply all? Can they take exemption? No. From 2nd year? No. Never exemption? No. After 2 years, you can take exemption. Got it? Not got it? Okay. Now, 5th one, slightly complicated. You have to pay full attention. Donkey fellow, 3 people left the meeting also. Zeta traders. This is what happens when I don't give break. Zeta traders. Who said yes? Zeta traders, a partnership firm, non-corporate, had a turnover of 240 crore and borrowing 40 crore in the financial year 23-24. Pay full attention. Minute point. It is not a bank, nor into insurance, nor FI, nor listed entity, nor holding and subsidiary of any other large entity. So which means all the 5 conditions satisfied. In which year it is satisfied? In 23-24 it's satisfied. Don't say current year because you're not in the full question. In 23-24 all 5 conditions satisfied. So what is the status in 2024? MSME. Listen to very carefully. Okay, now for financial year 24-25 it wants to avail exemption available to MSME under accounting standard. Is it eligible? In 24-25, they want to avail exemption. Can they take exemption? Now look at the option. Wait. Yes. Yes. Option A stands for S. Option D stands for S. S is right answer. But which S? They've given 2 S answer. One, they're telling that yes, because turnover, borrowing are within limits. Since turnover and borrowing is within limit, since borrowing and turnover within limit appadina, adukaga are you telling us? Or since they qualified MSME this year means which year? 23-24. Because they were MSME in 23-24, by that virtue are you saying yes? Or because they are having turnover and borrowing within the limit, are you saying yes? Now listen to very carefully. 21-22. 21-22. Large entity. 21-22 large entity. I said no, I want to do one discussion. I'll do an MCQ. That discussion now. 22-23 MSME. Here no exemption. Here also no exemption. 23-24 MSME. No exemption. 24-25 MSME. Why in 24-25 they're MSME? Wait. No. 24-25 why they're MSME? Because 5 condition satisfied. What 5 condition? 23-24 ka turnover is 240 crore. In the varshatoda applicability paakradhukku pona varshada turnover depend. So what is the turnover of the last year? 240 crore, which is less than 250 crores. Borrowing, how much it is? 40 crore, which is less than 50 crore. And in 2024, we were neither bank nor FI, nor insurance company, nor listed, nor holding subsidiary. So all the 5 conditions satisfied. So MSME here. Now I'm taking here exemption. I'm taking exemption because I satisfy the 5 condition, or apart from satisfy 5 condition, previous 2 years I was MSME. போன 2 வருஷம் MSME இருந்த காட்டி வந்து எனக்கு exemption கிடைக்குதா, இல்ல அந்த 5 condition satisfy பண்ணா மட்டும் exemption கிடைக்குதா? Again I'm no, listen to very carefully. Now what is the question trying to say is that current year, இந்த வருஷம், in this year, exemption is available or not available? Exemption available, not available. They have given only data this much. This data only given. This data only given. Now current year exemption is there. How will you decide? If 5 conditions are satisfied, will you decide that? No. Apart from checking the 5 conditions, you have to check that previous year MSME was there or not there. Got it, not got it. Listen to very carefully. Listen to very carefully. Now I'm telling one point, listen to very carefully. First year, large entity, no exemption. Second year, all 5 conditions satisfied. MSME solring ilya, no exemption. But we will not call this as MSME because exemption not available. Exemption not available. Or I will say MSME with no exemption. Got it, not got it. 23-24, all 5 conditions satisfied. MSME down. But am I getting exemption? No. So am I pure MSME or MSME with no exemption? இப்போ நான் 3 பார்ட்டா பிரிக்கிறேன். One is large entity, one is MSME with no exemption, and second is MSME with exemption. MSME அப்படினா, if I say MSME அப்படினா, it is MSME with exemption. But here no exemption means, can I say here both years they are MSME with no exemption? Got it, not got it? Clear or not clear? Apona, when will they get exemption? Only third year. Got it, not got it? Got it, not got it? Now listen to me very carefully. In this question, what is happening is they have given 2024 ka data. In 2024, all 5 conditions satisfied. Moreover, they are MSME. MSME means what? With exemption. When I say just MSME appadina, it is with exemption. Apona, in 2024, did I follow exemption or not? Yes. Got it, not got it? Because they're telling that yes, because it qualified as MSME in 2024. In 23-24, MSME qualified appadina enna artham? 5 points satisfied, and plus they were availing all exemptions from 23-24 onwards. Appo 2 conditions satisfy avano. What are the 2 conditions? One, that 5 condition has to be satisfied, and one, from previous year I was MSME with exemption. Appoda 24-25 exemption kadikkum. So you should not look into those 5 condition alone. Apart from looking 5 condition in current year, you should also check whether the previous year I was MSME with no exemption or MSME with exemption. Purida. So here the first point what they're telling, no, yes, you will get exemption. Why will you get exemption? Because turnover and borrowing are within limits. Just because turnover and borrowing is within limit, current year can you get MSME exemption? No. Because previous 2 years should have been MSME with exemption. Appoda only in the varsham exemption kadikkum. Or at least previous year you should be MSME with exemption. Appoda current year exemption kadikkum. Got it, not got it? Should I rephrase this one more time? This is very, very critical and very minute way they have asked. One more time I'll tell. Listen to very carefully. They are asking the applicability of AS for 24-25. In 24-25, MSME or not? MSME na appadina enna? Exemption is there or not there? If I have to be MSME with exemption appadina, 2 things have to take care of. What 2 things? In 24-25, all 5 conditions should be satisfied. Apart from that, previous year 23-24, I should be MSME with all exemption. This 2 condition mein satisfy aach appadina da 24-25 I'll be MSME with exemption. Now imagine current year all conditions satisfied. This is within the borrowing limit, within turnover limit, all conditions satisfied. Ana previous year it was having an MSME no exemption appadina, can current year you can avail exemption? No. So what are they asking? To become MSME with exemption, can I be MSME with exemption in 24-25? The answer is yes. Is the answer yes because of 5 condition being satisfied? No. It's because you were MSME with all exemption last year. So 5 conditions satisfied. Plus I was MSME in the last year. Since both the conditions satisfied, I'm getting MSME with exemption in the current year. Hence the correct appropriate answer is D. Appropriate answer is D. How is this? Powerful? Yes or no? In this, if you have any doubts, please ask me. Very, very important. Mark this question, super duper important. Confirm question in exam. Mean high chance. Sixth one, ABC and Co. ABC and Co is company or non-company? Sir, come up what avane non-company kuduthirukkan. In case if they don't give this. ABC and Co. Co stands for company. Co potta company eduma. Companies Act says what? For you to be a company, either you should be using the word limited, private limited, OPC. Have they used any word? No. If none of these words are used up to now, they are always a non-corporate. So ABC company is a non-company. Was an MSME in 20-23 and availed certain exemptions. Availed exemption. In 2024, its turnover exceeded 300 crores. Previous year, MSME with exemption. Current year, large entity because turnover crossed 300 crores. What should ABC company do in 24-25? That is 24-25. Next year, what it should do? Exemption available or not available? First option is continue to use all MSME exemption in 24-25. Wrong. Revise prior year financial statement to remove MSME exemption. No. Apply full AS for 24-25. Disclose changes wherever required. This is the right answer. Continue partial compliance with disclosure only. No. Partial compliance in 24-25, you will do full compliance. Whether you're a large entity or MSME, you will not get exemption. In the previous year, if you are large entity up to now, in the next year, you will be complying all AS, whether you're a large entity or MSME. Got it, not got it. So C is the right answer. C is the right answer. Any doubts here? Seventh one, X Limited company. Listed non-company entity. Listed non-company entity. Listed non-company entity. How can this be non-company? When is listed? Upon is wrong, done. But they use the word listed. When I use the word listed, will I go and check anything else? The moment you're listed, what will you follow? Ind-AS. But you have to see what is the requirement. This company, listed company, has a turnover of 40 crore, borrowing 5 crore. Not a bank, not FI. Can it be classified as MSME? X Limited, they're telling. Can it be classified as MSME? Yes, because turnover borrowing are within limits. No, because it is listed entity. Yes, because it is not a subsidiary of holding company. Or no, because listed entities are classified as large entities. Now, what you said is correct. No is the right answer. But I have two no. In B1, no is there. In D1, no is there. Which no is correct? Which no is correct? You're telling this X Limited being a listed company cannot be MSME because all the listed entities are large. Are all the listed entities or listed companies large entity? Are listed entity large entity? Was X Limited a listed not company? Listed. Are all the listed ones large? Why listed cannot be super big? Can it be only large? Which is more apt answer? B is the right answer. No, because it is a listed entity. Listed entity nale you cannot be classified anywhere in MSME or large entity. Where does it go to? Super big companies. Got it, not got it. Now I'm bifurcating this question into two parts. Had they told X enterprise, or let's say NABARD, NABARD, it is listed, non-company entity. Upper the answer would have been no. The listed entities will be classified as large entity. But what have they used here? X Limited. Limited na idu enga pogum? Listed goes to super big companies. So is the D correct answer? No, because they are large. Is X Limited large entity or super big company? Super big company. So what is the correct option? B. So they are not MSME because they are listed entity. Listed entity cannot be a listed. It's company listed. Where will they go to? Super big company. So B is the right answer. B is the right answer. Okay, not okay. Now, last question. MCQ last question. MNO Enterprise unlisted LLP qualifies as an MSME for 2024 and chooses not to claim exemption from AS 15. AS 15 no exemption means they are complying with, but avails exemption relaxation from AS 3. AS 3 relaxation is there. What disclosure is required? So when an MSME does not opt for all exemption, means some relaxation, some no relaxation, what is the disclosure requirement? The AS that they are taking relaxation, that has to be disclosed. It must disclose that it is an MSME and mention which standard the exemption it has availed. They have to disclose that they're MSME, plus they have to disclose that which AS ka exemption has been availed. C is the right answer. Okay, not okay. Now, Ravi Traders, unlisted partnership firm, turnover 230 crore and borrowing 45 crore. Which year? 23-24. It is not a bank, nor FI, nor insurance company, nor subsidiary of any other large entity. The firm wishes to avail MSME exemption for 24-25. Is it eligible? Is it eligible? Yes, it is MSME. Now, how do you write the answer and come in exam? How do you write the answer and come in exam? It depends. Now, if it is for 1 or 2 marks, you can write short form and come. If it is coming for 3 or 4 marks, then you have to first list down the provision. You have to list down the provision. What is the provision? For MSME, the below 5 condition, for an entity to be qualified as MSME, the below 5 condition, all the following 5 condition has to be satisfied. First, it should not be a listed entity or in the process of listing either in India or outside India. Second, it should not be a bank or FI or financial institution. Second, the turnover should not be exceeding 250 crores. Fourth, the borrowing should not be exceeding 50 crores. And they should not be holding entity or subsidiary entity for the large entity. Like that, you write the provision income. Then write, yes, Ravi Traders qualifies MSME since it meets all 5 criteria. Now, the 5 criteria what they've given is not acceptable here. This way, you don't write and come. You write in a professional way and come. Hence, it can avail MSME exemption for 24-25. But provided one more condition. What condition? Further, it is assumed that Ravi Traders is not a newly qualified MSME. Newly qualified MSME means what? Last year large, current year newly MSME. Current year new MSME now you can't get exemption. So it is assumed that Ravi Traders in the current year is not a newly qualified MSME because a non-company entity if newly qualifies MSME it can avail exemption only after it remains MSME for 2 consecutive years. Until then, they have to comply with full AS being an MSME. Got it? Not got it? So in that year and next year, they should be MSME without exemption. So we're assuming that he was not coming under that category. Hence, exemption is available like they did to state and come. Now, 13th question. To be very honest, last year, in the ரெண்டு இடத்துல வேற question இருந்தது. Both they have replaced. So last year's question, what I did is I put as my example in my notes. So I'll discuss after that. After these 2 questions, I'll discuss last year ka study mat ka question. Om Finserv Limited had a turnover of 180 crore, borrowing 55 crore in 23-24. It is not listed, nor FI, nor a subsidiary of the large entity. Can it classify as MSME and avail exemption for 24-25? Why? Borrowing is exceeding 50 crore. Borrowing is exceeding 50 crore. So no exemption is available. No, Omserv Limited cannot be classified as MSME because its borrowing is exceeded 50 crores, which violates one key condition of qualifying as MSME. So it will be treated as large entity. All AS is applicable. If this is asked for 1 mark or 2 mark, this answer is fine. If it is coming for more than 2 mark apnina, you write the provision first, then fact of the cases, and then conclusion. Got it? Not got it? Okay. Now I have a question here. For 12th question, you said Ravi Trader is MSME. Am I right? I want to know, will Ravi Trader follow AS 18 and 28 or not? AS 1828 should Ravi Trader follow or not? What is the condition? What is the condition to not follow AS 18 and 28? Turnover should not exceed 50 crore. Borrowing should not exceed 10 crore. It should not be holding a subsidy of that entity which is following 18 and 28. Here the turnover is crossed 50 crore. Apana Ravi Traders is MSME with exemption. Ana 1828 is not exempted. 1828 is not exempted. Got it, not got it. Along with this question, had they asked about 1828, that would have been a perfect masala question. Masala itself is missing here. Apana masala will come where? In the main exam. That's all over. 2 questions we are done, people. Then you can permanently go home for today. Permanently go home for today. Now, example 4. Old ICA study mat question. This question was practical question 9 of the previous study mat last year. The question was X limited with a turnover of 50 crore during previous year. Previous year turnover 50 crore. Borrowing 1 crore during any time in the previous year. So last year ka turnover at the end of the financial year 50 crore. Borrowing at any time during the year 1 crore. Wants to avail exemption available in adoption of AS applicable to companies for the year ended 31st March 2001. So what is current year? 2001. So what is previous year? 99, 2000. When you are not even born, no, that year they're talking about. Advise the management on the exemption that are available as per company's accounting standard rule 2021. Now here, whenever such things comes, no, you can interpret in 2 ways. X apnina, X means not that X what you're thinking. Here X means either 2001 or 2021. Okay. For convenience sake, I'm thinking this is 2021. Apana. What is the current year? 2021. What is previous year? 1920. So in 1920, turnover was 50 crore and borrowing at any time during the previous year 1920 is 1 crore. Now in current year 2021, can they avail exemption? Can they avail exemption is the question. Tell yeah, donkey fellows, how to write this. Now this is a 4-mark question. How do you write a 4-mark question? I've given a proper answer. This is how you have to write it. The question deals with issue of applicability of AS for corporate entities. Am I right? Either the corporate. The companies can be classified under 2 categories. SMC and non-SMCs under Companies Accounting Standard Rule 2021. First in the problem yaar deal pannudunu sollirken, which is corporate. Second, corporate is classified into 2 categories, SMC and non-SMCs as per the Companies Accounting Standard Rule 2021. As per Companies Accounting Standard Rule 2021, the criteria for qualifying or classifying SMCs are: SMCs means a company whose equity or debt security are not listed or are not in the process of listing on any stock exchange either in India or outside India. This is the professional language. And which is not a bank, financial institution or insurance company, and whose turnover excluding other income does not exceed 250 crore. They have not used the word 1 rupee to 250 crore. What is the language used? Does not exceed 250 crores. And whose borrowing including public deposit does not exceed, it's not in excess, does not exceed. That is, in excess means does not exceed rupees 50 crore at any time during the immediate preceding accounting year. And which is not the holding and subsidiary company of that company, which is not SMC, which is not a large entity, which is a non-SMC. Should not be holding and subsidiary of a non-SMC. If all these 5 conditions satisfied, means you are a SMC. You are a SMC. Since X limited turnover was 50 crore, which does not exceed 250 crore, and borrowing is 1 crore, which is less than 50 crore, we assume it is a SMC, provided all the remaining 3 conditions are satisfied. Assuming the remaining 3 conditions are satisfied. Hence, XYZ Limited need not follow all accounting standards. They have exemptions. In which they have exemptions, it's not anymore 3 and not 20. It is 17 because it is corporate. For corporate, full exemption is only for 17. Partial exemption for 15. Disclosure exemption for 19, 28, 29 and 20. And special or event-based exemption, which is 21, 23, 25, 27. Any problem? No problem. How to write the answer also I have shown. Now example 5, last question. A company was classified as non-SMC in 2021-22. In 2022-23, it has been classified as SMC, from non-SMC to SMC. The management desires to avail exemption or relaxation available to SMC in 2022-23. In 22-23, they want exemption and relaxation. However, the accountant of the company does not agree with the same. Who is correct? Accountant is correct or company is correct? Company wants exemption, but the accountant says no exemption. Who is this accountant? Chartered accountant. Who studied from? Now, as per company's accounting standard rule 2021, an existing company which was previously non-SMC subsequently becomes an SMC should not be qualified for exemption or relaxation until it remains SMC for 2 consecutive accounting period. Therefore, the management of the company cannot avail exemption or relaxation available to them for the financial year 2022-23. No exemption. Okay, no? Clap. With this, we are done with the chapter number 3 ka revision, which is applicability of accounting. Right? Now, from the examination point of view, not too much weightage is given for this chapter. Frequently, in every attempt, the question does not come in this chapter. But when it comes, properly it will come. So can you predict for your attempt the question will come or not for this chapter? No. So what is our job? To study everything and go properly, thoroughly. For that, we spend so much of time in the regular classes as well as in the revision batch. So now, in regular intervals, if you keep on revising, you will not forget. But I'm telling you, if you do not revise this chapter once in every 30 days, how many days? 30 days. You don't revise this chapter, or for that matter, any chapter once in 30 days, very soon you will forget everything that you have learned here. And whatever efforts you've put so far, no, everything will be a total waste. So from now, ensure that let it be any subject, any chapter, the gap between revision 1 and revision 2, revision 3 to revision 4, revision 5 to revision 6 should not exceed 30 days. Now, some people feels that, sir, for me 30 days also is too much. According to your memory capacity, you can modulate. 30 is an average period I've kept. If your grasping ability, memory power is too strong apni na, then gap can be in 60 days also. But if you're Gajani fellow apni na, then 30 days also is not sufficient. Then probably you have to revise within 15 days. So you know your memory capacity very well. So depending on that, you decide what is the best time gap for revising the chapter between 2 different dates. You decide the gap. From me, on average, the days are how many days? 30 days is the average day gaps. Okay, not okay. On that positive note, I'm summing up this chapter here, people. That's all from my side for this session. I'll see you all in the next class, which is on Tuesday, not Saturday, Tuesday, 5:30 p.m. sharp with a brand new topic. Until then, bye-bye. See you. Take care. Thank you so much. Thank you, people. Thank you.